It's been a few weeks. It's been since July 17th, I believe. So we're looking at August, September, October, November of steadily investing into one fund. That fund was Alti, ULTY. I was taking all the distributions from Misty, Coney, Nvidia, Hui, and putting it into Alti since mid-July until now, and I finally got to the 1,000 share mark. You know, it's not a massive account that I talk about over here, but it's my account, and that's what matters. And so I've been investing in ULTY from then till now, with DRIP turned on, DRIP, dividend reinvestment purchase program, whatever you want to call it today. I've been doing it since July, and so I had a goal. I set out on a mission to buy 1,400 shares of Alti. The reason I was set on that number was because that divided by or multiplied by 9 cents would pay me about $150 a week post-tax. That was the goal. I guess it wouldn't be post-tax. Well, I guess in Canadian, yeah, it would be post-tax. That was the goal that I set out to sail towards, but today I've made a decision. And that decision I don't take lightly. I've thought about it for a couple of weeks now, and I've decided to turn the drip off. I'm going to go over my positions with you. I'm going to go over what I've done, how far I've come, where I've gone, where I'm going, all in this video. My name is Mike. The channel's name is Health and Wealth. Thank you so much for joining me. I do these videos in one take. I don't know if you guys enjoy that type of thing, but I try not to edit out anything unless somebody comes through that door over there, but nobody's home right now, so we're good. Yeah, it's been a rough day. Today has been one of the most red days that I've experienced in a very long time. And, you know, it just feels like since August, that's all it's been, even though we've had some up days, but today we're down. I don't know if you heard, the government's not releasing the jobless claims for the first time in years. They're not going to say how many jobs have been lost. The government is reopening. We thought the market would take off because of that. Apparently not. Apparently somebody's name's on some letters. I don't know. But the market isn't liking what it's seeing. Interest rates are still high in the U.S. They're coming down in Canada, but you know, the housing market is not doing very well in both countries because of it and because of the economy. And that has a lot to do with today. So Alti today, I'll share my screen with you guys. Alti today itself down 3.54%. You know, crazy enough, my actual account's down 4.8%. So my account's down worse than Alti is right now, which is pretty crazy to think about, right? So this video, we're specifically talking about Alti. Later in the video, I want to talk about some future plans with my own account here. Something fun, I think, something entertaining. And by the way, this is entertainment, fun, educational, not financial advice. Just sharing my story, how I'm doing it, what I'm doing. Make sure you go do the research. And I mean, if you follow me, you're a silly goose because, I mean, who the heck would follow what I'm doing? Do your own research, pick your own stocks, pick the ones that are within your comfort zone. This one was in my comfort zone. Right now, I'm not comfortable anymore with it. But I heard some rumors about it that could change that around down the road here. Twitter going off today. Bitcoin underneath 100,000 today. Ooh, it's looking pretty good, right? So for me, I buy once every 2 weeks, $100, and I've always said if it gets to 75,000 again, I'm going to be doubling what I have in it, which again is not very much. I've only been buying since January, so you can probably figure out how much I have in it. Not much at all, but my average cost is underneath this still, which is really, really good for me. So yeah, Twitter going off. I went ahead and I went to the dividend channel. Look who's on there, and went ahead and punched in Misty and Alti here, and I compared them from April 4th till now. There it is right there, April 4th till now. If you didn't know, April 4th was like the day that the market turned back for good, to the good side, the green side. So I calculated both of those with $10,000. And man, this is crazy. Misty has had such a downswing because of its underlying stock having a terrible, terrible time right now. But yeah, check it out. So Alti's on the left. If you had to put 10 grand in on April 4th, exactly that day, and had it dripping, even though we've experienced some downside to the share price by almost just over $2, you'd still be up, right? You'd be up $3,459. With Misty at that exact moment, if you had dripped it, you'd be down almost $2,000. So I'm one of those people. I've had that money in that fund for a long time. I haven't been dripping into Misty for a very long time now. I've just taken the distributions and spread them out into mostly Alti here. So take a look. Here it is. If you didn't drip down below with Misty, you'd actually only be down, oh, get my head over here, down that $400 if you didn't drip. Isn't that crazy? And then with Alti, you'd still be up $3,500 if you didn't drip, which is kind of interesting to see. So yeah, that's a good little stat right there. Here's my portfolio with the Alti. So yeah, this might be the no, it won't be the last video. I think we'll continue the series. By the way, I forgot, this is Alti season 2, episode 6. I don't even know, I've lost track, everybody, but it was a fun episode, a fun season to do. Man, the red days have really just punched us right in the face, hasn't it? But that's the way the market goes, right? Sometimes it goes down, sometimes it goes up. You got to be prepared for the downswings. But yeah, so here's my total amount that I've invested in Alti now, $5,692. Current market value $42.76. That means I have an unrealized loss because I haven't sold anything. $1,415. That most likely will continue to go down if days like this happen, right? Total distributions in US dollars, though, is climbing here, $978 since July 17th-ish. Pretty good. Pretty good. I'll tell you my plan here with this in a bit. This is not updated. I'm just going to highlight that black. We'll get rid of that. Give or take like 30 cents on it. But this one is. So since March the 12th, when they made their transition from monthly to weekly pays, paid out $3.34, which is roughly 50% paid back since March. If you were in there since March, that's pretty good. If you had your money in there since March, you've basically been paid back 50% of your money. That's pretty good for sure. So average cost $5.69, current price $4.23. And when I did have a dripping, it was buying about 14 shares every week. But this week they've reduced the distribution down even further, hopefully to protect the share price down to 6 cents. And then in this section here, my percentage to target, which was 1,400 shares, you can see in July I was 11%. I'm all the way up to 73% to target right now. This is where the buck stops, though. That's as far as I'm going to get to this target for now. If I see some good changes in the fund, then I might start it back up again and get to the 1,400. But for now, I'm not really loving the direction of the fund itself. The share price continues to decrease. It gets very, very close to reverse split. Michael Coe has mentioned multiple times on Twitter Spaces and YouTube interviews that a reverse split definitely could help the fund in terms of its own options. People trading options on Alti, doing a 4-for-1 split. He's mentioned it at least 3 times that I've heard. And I'm not really one to love reverse splits. One of you is going to say it's the same dollar amount, right? Which is so true. At the time of a reverse split, let's say it's we're going to go 4 shares into 1, 4 for 1. It's going to be the same dollar amount on the day of the reverse split. It's going to go higher in terms of share price. So instead of it being $4, it'll be $16. But your dollar amount's the exact same over there. But what happens, watch Tesla, no strategy change, share price goes down, down, down. So does the distribution. I'm not interested in playing that game. So they need to do something different in the fund. And from the rumor that I heard yesterday, and I actually brought it up like 2 videos ago. Are they listening to me? Maybe. But I said, Wouldn't it be nice with all of that cash? Now, some of it has to be there to pay for the trades, but wouldn't it be nice with all of that cash in there to buy the top 10 names on the market and maybe write covered calls on those further out of the money, way further out of the money, but let that happen or let them be there for growth of the fund. Build up the share value of the fund by having the top 10 companies in there and not being super aggressive on the calls, but maybe that could be like a cushion to soften the blow to prevent the share price from nosediving down. I don't know. Could be a good strategy. And I don't know, but I think I heard that they were talking about that on Wolf Financial's Twitter space yesterday. I think that could work. And if that does work, then I will resume buying Alti. But for now, I'm not buying it anymore. I'm not selling it either, though. I'm keeping it to get the distributions. I actually just turned drip off today. And I'm going to take those distributions and continue to do what I want with the money. I'm going to talk about what I'm doing with the money coming up here. By the way, how are you doing? Are you guys okay? Red day today, I know, pretty rough. But this is the type of thing that happens on the stock market, especially if we're in the volatile stuff like we are with the yield max and the round hill and the curve and all of that good stuff out there, right? Here's how much money they had in the fund since July 31st. You can see this is their assets under management. And you can see it's really, really sunk down to $1.92 billion as of right now. 435,075,000 outstanding shares. That's really come down in the last couple of weeks as well. So what are you guys doing? I know a lot of you probably mentioned in the comments in previous videos you've sold, you've moved on to something else. What did you move on to? And I know a lot of you, I think the answer is WPay. For me, I'm thinking of a different type of idea. I've got two of them. I'm going to let you know in a second. Here's my passive, by the way. This is my dividend tracker. Last month was my best month yet in terms of distribution, so $2,007. The previous all-time high was $19.51. Good. So far this month, $4.26. This does not include the latest distribution of Alti. It's not showing up in there just yet. That'll be in there tomorrow just because I'm with Questrade and they always take their sweet time to put it in here. And then just to prove my numbers were accurate, 1308 post-tax here in distributions on Alti. That's Canadian. Converted it over to US to get that. Let's go back up here. 978 US. You guys want to do it? Do it. So what am I going to do? Well, the plan was to take the distributions and buy HHIS, which is a Canadian fund through Harvest. They've been really, really good since they've come out, paying a 26% per share distribution. I have 115 shares of it right now. So that is still on the forefront of my mind. I want to keep buying into that right now for a while, but I also want to start trading options. And so for the last 3 days, I've been sitting here on finviz.com, going through the screener, stocks under $20, a dividend yield over 1%, average volume over 2 million I put in here. And I didn't change anything else, but you can definitely change so many different filters in here. You know, you can change that volume as well. Volume creates volatility. Volatility creates higher options premiums, right? And so what I did is I went and I just clicked on volume over on the right here. I'll click it one more time. And it just shows the most insane volume out of that category that I've typed in there so far. So this SOX, SOXS, I went and looked at it. That map right there said, I'm not doing that. I'm not trading on that one. It's not looking good. TSLL, little Tesla play, maybe. I did say I didn't want to get too degenerate, but maybe. SQQQ, meh. TSLS, another Tesla bear one, not interested in that. So a lot in here, right? So I've got a few on my mind. This TSLL, Conal, CONL, looking pretty juicy. Man, I almost pulled the trigger today on another one. I forget what it was, but looking at Bull, looking at Open, looking at all of these different plays that I could do. The thing is, I just want to be able to make more than I am with the yield max funds right now before I do it. So I'm really weighing my options carefully over here. Pun intended, I guess. And I'm not too sure where I'm going to go with the options. I want to be safe, around the 20 delta mark, things like that. So it's risky, especially when the market's tanking this hard. It's definitely risky. So it's something I'm not taking lightly, and I'm kind of take my time to make a decision. But I'm also looking for feedback from you guys. Bitcoin, how are we doing? 98,000. All right, cool. I also loaded this up here. And I went to ChatGPT and I was like, talk to me about the wheel strategy. And so this is what I want to start doing. Other accounts like Dark Miner talk about the wheel strategy and how they went from, $5,000-$10,000. Now they're trading at 500,000. So, I mean, I want to take it slow, steady, educated, not as risky as I can. Just to kind of build slow income and go from there. So let's go over the wheel strategy a little bit here. So it's a systematic income generating options approach. So selling cash secured puts, by the way, Questrade just opened the door on this one on a cash account. We can do it. Before they made you have a margin account level 4, $10,000 in cash. Now you just need the cash for the secured put level 2, which is really good. Doesn't need to be a margin account. Really good decision by them. I've been complaining about it to them for 4 years. Finally, we made it happen. So this is why I'm getting into it, everybody. Selling cash secured puts on stocks that you would like to own. Yes, sir. I like that a lot. Would I want to own TSLL? I don't know. I like Tesla. Do I want to own TSLL? Though that's the thing. There was another one. There was like a NVIDIA one there too, which was pretty good. 2x leverage. I'd rather, I think, own NVIDIA than Tesla, so maybe that might be my option. So if assigned, then you sell covered calls on the shares that you now own. Repeat either collecting premium or get assigned again. So that's essentially the wheel. There's a step-by-step process. Step number 1, selling a put where delta matters. And that's kind of what I typed into ChatGPT. I wanted to know more about the delta. And so I had that on my Questrade. It's on the far right, delta, and it kind of gives you a percentage, right? So for me, I'm trying to stay in that 20% delta. What that really means, everybody, is I'm going to generate less premium than if I had a higher delta, like 30, 40, 50%. I would get way more premium for these options if I did that. But it's then more risky. It's more likely that I would get assigned those shares. If the share price came down a little bit, right? So when you sell a put, you're obligated to buy the stock at the strike price if assigned. The delta tells you 2 important things. Probability of assignment, and it's just a rough estimation, right? And how much the option price moves when the stock price moves. So I've been hanging around this 20% mark in my mind. Delta as probability. For puts, delta is negative because the options value moves opposite the stock's price, but traders usually use absolute delta, ignore the minus sign as a rough proxy for the chance of assignment. So you can see here 10, 30, 50%. And like I said, I'm hanging around the 20. So 10% delta means you're far out of the money, unlikely to be assigned unless the market does something like today. Moderate would be 30% good premium versus risk balance. And so for me, I'm kind of hanging in between the two of them. So I'm getting good premium, but better risk balance. And then 50% is like at the money. So you are really close to what the share price is right now. So, I mean, if you love a stock and you love the price it's at right now and you're comfortable with that price and the chart just is like, like this, then go out the money. But all the ones I've been looking at are pretty risky. And so I don't love being at the money on them. So I'm kind of leaning towards a little more safety on that. All right. So 30 delta put means there's roughly a 30% chance you'll end up owning the stock. And that's just an estimation. 10% means that 10% delta put will likely expire worthless, but pay a smaller premium. Good to know, right? So delta and price sensitivity. Delta also tells you how much the options price moves relative to the stock. A delta of 0.30 means if the stock goes up $1, the put loses about 30 cents in value, which is good for you as a seller. If the stock drops $1, the put gains 30 cents, which is bad for you as a seller. So lower delta puts are further out of the money, are less sensitive to stock price changes. A little bit more about it here. There's only like a page or less than a page, just this right here. We're talking about strategy goal here. So income focused, avoiding assignment. That would be me, right? Because I'm in the 0.20% mark there. High probability of expiring worthless. So all I'm really doing is generating income or premium. Low chance of owning the stock. And then you got 0.3 to 4. Balance premium probability of getting assigned is higher, especially when you get close to that 0.40 there. And then 0.45 to 0.55, high chance of assignment, deeper discount if assigned. And then you get a way bigger premium in there. So that's kind of what I'm looking at, everybody. Those are the ones that I really looked at today. I've spent a couple days really kind of researching them. I'm so happy I didn't do it yesterday when I wanted to. They always say, you from what I read, sell puts on a red day, buy calls on a green day. Don't quote me on that saying. I'm brand new to it over here, and I'm just learning just like you guys. But, I'm just looking for other ways to generate income on my account and not necessarily leaning or relying on somebody else to do it. And I think it could be a good thing for me to, educate myself and find other ways to generate that income. I did do covered calls for a year before, but Questra used to charge $10.99 every single time. It was insane. Now it's 99 cents, way better, now way more affordable. But yeah, kind of a hodgepodge. Is that the word of information for you today? If you enjoyed the content and you want to see more of it, hit the subscribe button. Please hit the like button if you could, just so more people like us get to see videos like this. My name is Mike. Channel's name is Health and Wealth. Have a good night. Bye for now.